Microphone check, screen share check, please. All right. Good night. Good evening, guys. Kenneth, Tortoise Capital Nightly Strategy Podcast for September 6, 2022. Start with the market 150. We had some price stability here. We did not get much further breakdown, but we did not get a rebound. We had a small range day at the end of a harsh sell-off, so we did not materially improve, but we did stop the bleeding. So we're setting right on the 30-day low at 390 and some change. That's kind of crucial. If that breaks, 380 and 370 are both in play. So this is a market that is in tension and under pressure. On the 30-day look back, market 30, you can see that this is where the market closed yesterday after a big down day. It was a large range day yesterday with a slight gap up, but then mostly a sell-off. So there was not much net change day over day, and it did push slightly to a new 30-day low. But some of the painful selling from yesterday subsided. So the small range day on the 1 day, and now the 5-day range is smaller than the 10-day range. So that feels like a bit of a volatility compression, and this should lead to the potential for another test back to the upside. On the 10-day look back, let me check something, Tucker. I'll try to I'll stop it and then try to reshare, but everything on my end looks like it should be sharing. All right, now to the market 30. This 30-minute. This is a 10-day look back. So this box is the 5-day box. This is the 10-day box. These are those key support and resistance levels to the upside. This 390 feels really important to me. Today's price action was low range. It's getting ready to break north of that PSAR flip, but anything south of 390 is an intraday short instantly. And then we would expect to see, price action like that. When those support levels break, you get that kind of a move, which is about a $5 move. So that would take it to 385 en route to 380. So we need to be mindful of that on the short term in a bearish normal condition. Routine preparation. I mean, it's our favorite pattern. 2, 3, 4, 5. All right, so let's take a look at the sector performance. The S&P minus 0.38 was the best performing index of all. So that's problematic because all of the other speculative indexes are bailing, and there's no sign of growth in any of those large indexes. So there may be some short-term opportunistic ones, but this is problematic for the larger market. So diamonds were the next best at 0.5, tech at minus 0.72, the Russell at minus 1%, emerging markets at 1.2, and treasuries continued to collapse at minus 2.5 to close well below the support level of 110. It's now into the next price channel below, which is between 100 and 110, closing at 107.49. So the yields should be getting good on that. All right, let's take a look at the underperformers again today, see if we get some more weakness tomorrow, where we should be looking for continuation patterns. Have to shrink that up a little bit to make room. All right. So again, the S&P. The first cluster of sectors that were weak, staples, blended commodities, tech minus 0.66, then lumber minus 0.77, energy minus 0.9, wheat and precious 0.96, Aussie dollar off 1%, the other lumber minus 1%. Then we have ARC Innovation and Mexico off 1.2, 1.3. A big cluster in here of oil exploration, the FANGs, Squarespace, ARC Genomics, and Brazil between 1.5% and 2%. Then biotech off 2.8%, and then bringing up the tail end here, marijuana minus 4%, Bitcoin 5.8% as crypto continues to implode. Individual targets, Coinbase on further crypto weakness at minus 3.8%, Alcoa and Intel 2.7%, Nvidia in the chips 1.3%, Devon Energy 1.14%, Microsoft off 1.1%, Apple also weak. So when Apple and Microsoft are both lagging tech and the S&P, that's just a sign of nervous in the service, broad weakness. To the upside, the sectors that were better. So here's the S&P again at minus 0.38. So the first sector, and these are still all underwater, but materials, Ethereum, finance, consumer discretionary, and oil between minus 0.3 and minus 0.1. And then this is the cut line between making money and losing money today. All right, sorry. So the first set of sectors that outperformed materials, Ethereum, finance, state, consumer discretionary, and oil. That gets us between minus 0.3 and break even. This is the cut line between making money and losing money. Clean energy, agriculture, lithium, and Simon Property Group, that's commercial real estate, between 0.17 and 0.51. Agriculture remains above the key price level of 20, so that's still good and strong. Real estate and VIX between 0.8 and 0.15. Tesla, 1.56%. Uranium, up 2.16%. And then the individual targets, Rivian and Cliff, 3.6 and 3%. Robinhood and U.S. Steel, 1.25%. PayPal, 0.54%. And then Texas Instruments, basically breaking even. All right, we'll go to the reports, starting with the sniper trade of the day. This is 3M. So 3M has been a sniper target Godzilla to the downside for the last 2 weeks. And this is yesterday's close right here. So basically anything below the RL10 break right here is assigned to the downside. So the PSAR continues down. We get a risk box move down from the open. So that to me is an automatic short with a standard risk box on 3M. That's 60 cents. It makes a standard move back to the PSAR for +1. I'm only interested in the downside on this one because it's been so bad. I get the PSAR flip, so I'm only actually risking that much of the standard risk box, which is this. I use that for position sizing, and this one is basically a scratch. Then another collapsing dragon, and again, I'm only risking this much of the standard risk box, and that thing collapses just like it's supposed to into a shelf. And this collapse right here was an opportunity for a second position. It was a span of control. I was already fully committed by this time, and so I just let this one continue to rock. PSAR exit, and that one is worth +2. So now we are at net +3 for the day on this one. Comes into a shelf, PSAR flip. So again, I'm only risking that much of the standard box. It fails immediately like it's supposed to in a bare normal condition for another +1. And that's +4R. Standard work, respecting the direction with the Godzilla setup on 3-minute charts and a standard risk box. Absolutely boring. Standard work. Dashboard number 1, we're in bearish normal, oversold on all the short terms. Long terms are getting weaker. We are in risk off condition according to the risk Z, meaning that the downward move is a real threat. At -1 standard deviation here, this is right on the threshold for significant collapses. These were all significant short side opportunities, and it's sitting right there, ready to collapse. It's got to roll over and resume in order to begin potential for short-term swings. But right now, the risk is all on the downside. The minimum pain, Johnson & Johnson, Walmart, McDonald's, United Health, and Travelers, those have fallen the least from their 10-day high. Max pain, number 1 position again, 3M. That's why it's on my target list. Alcoa, Intel, Boeing, and Caterpillar. When there's this many auto framers, what you have is a considerable sell-off from the 10-day high combined with a relatively small 1-day risk. What should be also noted is you've got 5 good 5DDs, which is a superb swing trade on the long side, but on a failure, those can be shorted immediately. And so you got American Express at 3.4 to 1, Caterpillar at 4 to 1, DuPont at 4.2 to 1, Intel, a big loser of the day at -2.6%, is at 3.8 to 1, and 3M, the number 1 position, 5.6 to 1, off at 4% today. And then the last 5DD with Microsoft at 4.4 to 1. So those should all be high on your priority list for framing. Now we'll take a look at the ones that have had big collapses. Here's one that is broken down on all 4 of the time frames of interest on this chart: 10 days, 1 month, 3 months, 6 months. And that's Intel breaking down. You have 3M, big breakdown. and you have Verizon continuing to break down. Plenty of swing trade one day at a time ideas right there. ETFs are about in the same kind of condition with respect to the big sell-offs. Japan getting slaughtered, as are treasuries, big weakness. S&P staples collapsing. When the defensive sectors are collapsing, that's a problem. The Dow, the 10-day and 1 month breakdown. The Russell breaking down. The mid caps breaking down. There's a message in there. And then compare those to the S&P, which is also bad, but not quite breaking down yet. So it's actually holding on a little bit, and that's some institutional defensive plays there. But the speculative indexes are collapsing. On the auto framer, 3M in the second position at 5.6 to 1. There's the standard framing data for swing trading one day at a time. But you got tech, the S&P, emerging markets, and Microsoft, materials in the Dow, the Russell. Everything is on this kind of condition. But I like to start from the top down because of the most favorable reward to risk on the upside. And then they're the ones that have fallen the furthest on the downside. So those are the ones that I want to be in if they fail through today's low. That's an instant short for me tomorrow. Only oil is on the squeeze. What I find especially exciting is that 3M, today's big percent loser, is still relatively squoze. It's in the top 10 squeezes, meaning it was, even though it was a 4% sell-off, it's not exceptionally horrible. Let's just, as a reminder of what horrible looks like in 3M. See if we can pull that one up. That's some 3M collapse for you right there. You know, if I'm looking at the sniper with the 150, this thing is just as bad as can be. It's at a 150-day low. There's nothing, there's no support back here whatsoever. Those guys have all abandoned ship. The 30-day low is here, the 10-day low, the 5-day low, the 1-day low. Here's the PSAR flip at the collapse, right where it could not break through any higher. It's collapsed there one time that far, comes out, can't get any higher, collapses through the PSAR, collapses through the dragon, collapses through the belly of the RL10. All of those, 1, 2, 3 signals to the short side. And then today, if we zoom in and look at it, all it did today was simply break down below yesterday's low. So yesterday's low is right here. It opened at yesterday's low and then immediately cratered. What that means is you can short that instantly. And all it did was just sell off harshly, and that was 6R. You don't need much more than that. You just got to know where to look. All right, jumping into the Snipers, lots of Godzillas coming online. In the tactical symbol set, NVIDIA, treasuries, emerging markets, and Bitcoin. Here's the ones that are starting to get enraged already. And then the weakness in Bitcoin is already, I mean, it's in the absolute bottom of the stack. Well, that's what it has to be to get onto this setup. And then in the S&P 500, 3M, it's the only Godzilla. Well, there's two Godzillas that are extremely volatile on 1 day and 5 day. 3M and PVH. That's the no-brainerest trade you ever saw. Should we go look at PVH? Why not? Just for the heck of it. See what that looks like. You knew it was going to look like that because it was on a Godzilla and that the volatility was large. So here's why that volatility is large. The 1 day range is about a third of the 10-day range. So that is a large range 1 day move. And then here's the 5 day range. The 5 day range is most of the 10-day range. And that's an exceptionally large percent move compared to the last 30 5-day percents, right? So that makes this extremely volatile on the 5 day and the 1 day, and the trade location at the bottom of the 10 day, the 30 day, and the 150 day makes this the best pattern ever. Because what you have is this thing is horrible at the bottom of the stack. It's either going to collapse big or have a surprising rebound to the upside. The least likely move is that it has found its perfect price, is then going to go sideways quiet channel for 5 days. That's the least likely move. So if you get the least likely move, you're not going to lose any money. It just doesn't pay off. But if you follow the price out of this compound critical state, you're good to go. Sniper trading. In 1 minute, that's what sniper trading is. Only 2 fireworks. These are the ones that have had extraordinary moves up and are leveling off at the top of their stack with a small 5 day range and a small 1 day range. These are popcorns waiting to pop. Which way is it going to go? I don't know. But the move down is going to be large. The move to the upside could be large when it breaks out of there. The fence sitters, almost no volatility in there at all. Not much to see. The most quiets are all really, really quiet. The interesting ones right now are the most volatile. Which ones are actually moving? Right, look at right at the top of the stack. There's your 3M. There's your PVH. Now, these other ones like LEG and DXC, they're also volatile, but their trade location is not as critical as the Godzillas. And then these three are sort of have normal ranges, but they had some 1 day sharp volatility. So that could be the start of a move. But when I have Godzilla patterns that are already in play, I don't even really have to look that far. Here's your auto framer information for the sniper with crucial levels like The swing trade reward to risk for the auto framer back to the 10-day high. The R10 intraday minimum manageable risk box. Mechanical entries for those planted swing trading one day at a time. And the range stat. These other risks and risk divided by 3, those are variations of swing trading risk or short-term trading risk. My preference is to jump right to the R10 and frame off of that number. No surprise, the winter is dominating in both the stocks and the ETFs, and horrible winters. When you got winter and in the red, that means that price is well below the Red River. You know, the MACD signal line is well below the Red River. And even the ones that are not in the winter are suffering in the fall. 15 days ago, this was a market that was recovering and all systems go. Not so much. Those top 5, based on 5-day volatility, that to me is the first place that I look at for what's jumping, what's moving. The multi-time frame NDX. All of these big breakdowns. Ed asks, does mechanical entry work for both directions? Yes. As like on 3M, as soon as it broke down below yesterday's low, auto entry, short. So this is the idea. Here's just a quick class. When we frame, when yesterday's daily bar looks like this, and it's in a critical state, the auto framer does this. It finds the price 5 cents below yesterday's low and says, any price below that level is auto short. That's the red zone. And in the red zone, by default, I want to be short, especially when this is a bear normal and the risk Z is showing vulnerability. Anything below yesterday's low is a new signal of increasing weakness. So that's auto short. 5 cents above yesterday's high is the green zone. All other things being equal, any price that opens inside here and then moves up through yesterday's high, that's a new signal of new strength. Yesterday, it could only get this high and stopped, and then that rolled over and closed here. But if today it breaks out above yesterday's high plus a nickel, that's new information that there's more buyers pushing this thing higher. So in the green zone, by default, I want to be long. That leaves inside yesterday's range this is all noise inside here. Like, we have no new information about the swing trade until it gets out of the yellow zone. Now, it may be that using the R10 inside the yesterday's range, it may be that if price opened here and then sold off and then gave us a 1, 2, 3 or an SSC, we might be able with an R10 risk box that big to see 1, 2, 3, 4, 5R just to the edge of the yellow zone, where if it stops and starts to fail, we're not allowed to be surprised because that's what it did yesterday. And so I can cash that trade on an intraday basis. But if it breaks out above that and I get a mechanical entry for a swing, I can use the money that I made inside here to fund the risk of going an additional position long. Now, if this is the price action that I saw today, if it moved down into here and started to go up, and that was the low of the day today, I can then stack a range stat on that. Draw that in orange. I can stack a range stat on that from the low of the day. And then my maximum intraday reasonable move is from the low of the day plus a range stat north. Then that gives me my maximum reasonable intraday move. So we can use that information of yesterday's range to frame some very simple standard moves the next day. Especially in a bear normal, we can say, if it gets below yesterday's low, dude, I am short in the red zone. That was 3M today for 6R. We can also say that if it gets above today's high, then I'm in the green zone. And now I'm interested short term in being long because I've got evidence that there's new buyers coming in. And I'm always going to know the size of my range stat so that I can start calibrating the maximum reasonable intraday move from wherever I entered. I find the low of the day so far, add a range stat, and then I can compute the size of the reasonably available move. All of that is available every day with end of day prices and the statistics on the range stat and the R10. That's what the auto framer does for you. When I come back here and look at the auto framer, that's all I'm doing on this chart. The risk to reward is giving you the reward to risk ratio for a swing trade back to the 10-day high. That's this column. That's the simplest tool known to man, the inclined plane. All right, so now we've got the RL30 slope is down. The adaptive regression line slope is down, and you can see the weakness lately compared to the upside when things were improving, and then it couldn't get any better, and then it starts collapsing. And when that one collapsed below that low, that was the first signal. And now the slope is below the zero line. That's the dashed line is the zero line. It is now a negative slope. And the black line is the long-term average of that slope. Because we've been in a bear for so long, the average slope of the last 180 days is down. So this was 15 days ago. Everything was positive, couldn't be better. And we said, you know what? That's 2 standard deviations above the long-term average. That bear or that bullish move is getting a little long in the tooth. That was this move. That was a 15% bounce off that low, but we've given back half of it already. And we've just started to see evidence of panicking. What do I mean by that? I mean, all the indexes were negative today, and the S&P was the best performer. That means everybody else is bailing out of those other speculative indexes. That's why they're selling off harder. And even the treasuries are no safe haven. That's people pulling money out of the markets altogether, raising cash, protecting against stormy weather. That's what this is. All right, that's everything from the daily. Sniper trades. Here's Cliff. So these are all on 3 minutes. These are all intradays. That was the open. All Cliff did today was, here was yesterday's close. It gapped up to here. So that's all gap. That's like 2 standard R10 risk boxes. It then moved up another risk box. So I just held my nose and bought it. This thing ran up this far and then rolled back 1 risk box. So I cashed it there, and I make on 1 unit of risk 1.5. So that's 1.5 in the first 5 minutes. Standard work. It rolls over and collapses sharply. I was not prepared to trade this short. Even when it went through the PSAR, was not prepared. I was just happy to take there were other things I was doing in 3M that were easier. So now it bottoms out. I'm feeling this. It's still above yesterday's close, so there's a little bit of a buffer, checker hold. But the PSAR dots are still way up in here. This is, so if this improves, maybe this will meet the PSAR on the way down, and then maybe somewhere over in here, there's an entry. Stalking. So PSAR flip, standard risk box, instant -1. So this was plus 1.5. This was an instant -1. I should be short that one immediately. I don't think it was. Nope. It bottom ticked me and then instantly recovered. So all I did was re-enter at the same price level that where I just took the hit. Because this is still a COTA 2 with a little R10 wiggle. Standard risk box, hold my nose, buy it. Standard exit. One unit of risk, 1, 2 units of reward. So now that's +2 plus the net 0.5. So we're at plus 2.5 so far. Standard work. COTA 2 is continuing. PSAR flip, standard risk box, buy it. Scratch it. Miss the short. Miss the long. 3M was much easier than this. So I'll take my 2.5 and go home. Check or hold. Tesla, 3 minutes. Here's the OR3. Could have been. I wasn't feeling it. took the short on the collapse. Everything was going down. That was an easier entry for 1R. That's a stop and reverse. Tesla had a lot of strength yesterday. Standard risk box off the PSAR flip. Yikes. One, two, three, plus three. This was the site for a potential second position right here. Why? Well, there's an emerging dragon, and there was a couple R10 wiggles, and it did not fail back to the PSAR, but just sort of continued up. That was a potential second position. If you want to draw that line from here, you end up giving back that whole piece. So for me, the statistical resistance is right there. And when that starts to roll out again, that's enough to get a second position. But span of control, 4 bullets were already deployed. So that's 3. Kata 2, quick fail. Did not play the short. I treat this as an SSC, and I'm going to show you why. I like the fact that Tesla was outperforming all over the place today. Now, that was really a strong move. But what I have to contend with is a low and a lower low. So this feels like a harsh downward move that has found support. And if you argue to me, well, no, there's really a Kata 2 in there, I don't disagree. But this feels like one that has to prove. This feels more like an SSC to me. But in any case, standard risk. Now, where this will get interesting is if it has to get above this peak, and then it has to get above that peak, then it's free and clear. So really, I treat those two regions as the tactical trade. All I need to do to be successful in the tactical trade is to get my risk out and above my entry, which is here. As long as I can get my risk up there and I can lock in that little bit of gain, then this is a science project and everything is right in the world. I'll think about a second position up here. Check or hold. I got my little one piece. It came up and rejected. It did not break out further. I was able to just preserve, that little unit of gain, and happy to do it. It's getting late in the day. It's almost 3 o'clock and no more trades. And it just it finished strong compared to the rest of the stack, but there was not much more than that first early surge. And then everything else was just kind of locking it in and then nothing. So tomorrow I'm interested in any price that gets north of this, but if it breaks down below here, I could be tempted to get short right here and then break down to here. But for the mechanical trade, anything below this is short on an end of day price. That's the mechanical entry short. So this tomorrow would be a tactical short, and then this is the mechanical daily short. Check or hold. US Steel, 3 minutes. This had the same gap up that Cliff did. So here was yesterday's close. Here was the gap up opening. So it gapped up that much. I was already long one in Cliff, which was running amok. So I just observed this one. There was a span of control issue early. It rolls over. So I didn't get the short until this thing collapsed. It ran up all the way over, back down and gave me a PSAR flip right here. Standard risk box. This is where I could have considered a second short because it breaks below that collapsing dragon. I didn't. Just played the one and then played like a 1, 2, 3 entry or 1, 2, 3 exit to get that standard exit here before it gets up into this. And I'm happy to take 1 unit of risk and get 1 unit of reward. That's a +1 routine short and just harvest it. Check or hold. That is the SSC entry. Now what I've done is I'm front running the PSAR by a couple bars. And why? Because this thing had moved. This was a 1, 2, 3 entry. I could have actually stopped in reverse there. I waited for it to get through the dragon, and it was a full risk box off the bottom. So I just held my nose and bought it. Here's an R10 wiggle. I could be considering a second position here once it gets above the previous short. That was a possible span of control issue, though, and regretting that I didn't get the second position on. But then taking the standard exit, 1 unit of reward, 2 units of, or 1 unit of risk, 2 units of reward. So there's +1 and there's 2. So we're about +3 right now. What would you call that re-entry at the green dot? Caught a 2 all day. Standard risk. The standard risk box is this one. But I'm really only risking that much because of the location of the RL10, right? If I wait for the RL10 to break north, I get the entry here, I'm giving up that much gain for the extra confidence that this is working. All that paying for the extra confidence does is make me not earn that money. And here's the real difference. When this breaks out above here, if I've entered at the green dot, then I can already be moving my stop to no lose plus dinner for 2, where the guy who's waiting for extra confirmation is starting to enter. So while he's beginning to take the risk, I am removing my risk and I'm handing him my risk. I hope he's successful. I hope that thing goes, but I've got my risk out of there. I gave my risk to the guy who needed more confidence and more confirmation of the move. I hope you see that. You have got to become comfortable with being uncomfortable. And so the difference between those 2 trades now is that this uncomfortable unconfirmed trade makes that little bit of bank, whereas the guy who waited for this to enter right here has a scratch trade. And the difference between a lot of zeros and a lot of plus 0.3s is money. That's the difference between those two. Money. Missed the short, missed the COTA 2, missed the short. Oh, now I'm feeling stupid. So I'll just go somewhere else and just be dumb. This is Devon Energy. Market collapsing. PSAR is flipping. That's the PSAR flip, but that's my standard risk box right there in Devon Energy, which is the top of that RL10 anyway. Now, if it breaks below this, and if I put a second position on right here, what would we call that second position if we put a position on right there? What is the pattern that would be? Collapsing dragon. Didn't take it again. Again, this was a span of control issue. I get my 4 little bullets and got them all deployed, so I didn't have extra capital. I had time, will, and pattern, but no money. One unit of risk, 1 unit of reward, +1. This one is in Devon Energy. That's the energy sector. Now I'm noticing the PSAR. So if I can get a little love here, we might be able to get a SSC in. Standard risk. Took out the PSAR. By this time, I should have my risk out. And I do. And then it makes a COTA 2 entry. In this case, that happens so quick that that's an emerging dragon because it's above that hump. And now the interesting price level will be over here. Now that I've got this in hand, my stop should be from here to about here. I should be locking in that much. And that's like the 2R battle drill kind of right there. I've tightened up the stop. And then I might be interested in a second position up here. If you listen in on my brother's course, we talk about, putting a second position up here automatically so that if it does break through that price level, you get surprised into the position. And then your job is to get your stop to no lose plus dinner for 2 on the second position. Auto entry. But it doesn't. And so we take, the half an hour win. I stayed longer on, here's the 1, 2, 3 entry. Here's the spine of the dragon. There's the PSAR exit. I took the worst of those 3. I gave back the most of those 3 entries, but I was really hoping for a COTA 2, a quick reversal. And I had a little bit of money in the bank. So that was my risk. Kata 2 entry. Low, higher low, higher low, PSAR flip, standard risk box. My execution level, so see this, my execution level is going to be right here. So I'm really only risking that much of the standard risk box. So that's like a minus 0.7. And it hits that, so doesn't work. I thought really hard about stopping and reversing there because now that's a Kata 2 to the downside. The argument is this, that this support level didn't hold. The next target would be here. The next target would be here. And then if it falls below here, I want to be short with a large position by there if I'm going to commit to the short. So I thought hard about that. Didn't take it. I didn't have the will or the money at that point. And regretted that decision because that's an R. Then that would have been a stop and reverse. I didn't have the will or the money again on that one. And regretted that one because that was an R. So we take our, I think it was like 2.5 R on this one and go home. This is KMI. So this is Kinder Morgan. This is a resource company, raw material company. And this was a TC2000 alert. This one said, holy mackerel, while the market was going down, this thing gapped up and ran amok to the upside. So this was a very favorable. So I came and looked at that thing and it started rolling over. And this is the same time that US Steel and Cliff were both collapsing. So I looked at this one and said, well, if that breaks below the collapsing dragon, I will take that. And there's a standard risk box. Beauty. S&P 500 company. This was a R10 wiggle. I could have put a second position on there because now I am 2R in hand and a confirmation that it's not finding support. So that could have been an extra R there. And now I would be noticing, yeah, the R10 is rolling over. So my stop, whether I have the second position on here or not, by now, my stop should be like at the PSAR, and I should be already plotting. Would I be willing to take this one on a recovery move to here? On your note sheet, you decide. If this covers right here, would I take that as a stop and reverse and try to capture the 2R move that gets back into this congestion? Commit to that trade, yes or no. I mean, it's obvious that if this thing fails below here, we're just going to collapse and dragging that thing forever. The question is, do I want to play the counter trend? Yes, I do. And I'm out at minus 0.3 or 0.5. Re-enter on that same pattern, same price, same trade, out. And I feel like, okay, I can take a hint, and I think I'm done with Kinder Morgan for the day. Although there was actually another R squeezing out of that. But if the materials are weak, that one could be ready to play tomorrow because there was some significant selling pressure here. There were a few hints of buying pressure, but no follow through. But there was not a lot of additional sell-off. Not a lot of additional sell-off. So it may very well be that could be a support level. And then the rebound trade might be happening tomorrow. Like same price level here, but there was no follow through. Didn't happen. Tomorrow is another day. So KMI will be in play for me tomorrow. All right, let's take a look at the traders. This one we saw yesterday from Arch on the 5-minute Aussie, but he did a nice job trying short, quick exit, re-entry short, got paid, stop and reverse, got paid, stopped and reverse, got paid, stopped and reverse, got paid, and squeezed out 0.7. Here's Tim. Caught up in meetings. Oh, 1, 2, shelf, breakdown, gets paid. The re-entry could be here. I think he got that and got paid. The SSC, quick exit, stop and reverse, quick exit, got a little chopped up here, took a break, and then missed the move because of meetings. This is a COTA 2. That's a nice pay, but I feel like we gave back too much of that. We gave back more than half. So I'd like to see us. I'd like to see us getting short in here. He did, and then we should be re-entering short there to get paid to here. So I think too willing to get long, maybe. That's going to happen. I don't have too much disagreement with most of those moves. Luke with the Aussie. Excuse me. Sideways quiet channel, PSAR breakout, gets paid. COTA 2 re-entry, gets paid. Dragon rolls over, RL30 rolls over. That is an owl as it crosses the VWAP. Short, rolls over, second position, beautiful exit. Gets a COTA 2 off the dragon. I like the idea, a little slow getting out, but I like the stop and reverse, which pays for that. 9R. Está bien. Woj. This is Devon Energy. He gets the same trade I did. He saw this, but he had an open Tesla trade. So he's +1 on Devon. Tesla gets paid. We need to have this. We need to have that one as a re-entry. Then that would be a second position. But he gets nice work out of Tesla. So 3.2 combined out of those. And then on the Aussie, he picks up another 2.5. So total of 5.7 for the day. Not hurried, very calm. Paid, was managing other symbols. And so you can imagine what that would be. That's a span of control issue. So we'll take 2.5, time, will, pattern, and money. Perfect. All right, that's everything we got for today. We'll get this published and posted. And we'll be ready for these guys tomorrow.